listening to Dairy Voice by Dairy Business News, a podcast exclusively for the dairy industry.
One of our sponsors of the Dairy Voice podcast is National DHIA. NDHIA ensures information accuracy and represents their members' interests. They are the direct voice for the dairy information industry. To find out more, go to dhia.org.
This episode is brought to you by DRMS. DRMS is excited to introduce Rapid Reports and Bovine Bio, two new tools within the Herd HQ platform. Rapid Reports gives you instant access to individual animal data from any web browser on any device. Use test day or Dart Sync data from your processed herd to build and customize reports, sort and filter results, create lists unique to your goals, and drill down to individual cow pages with Cow Compass. Bovine Bio brings flexible, user-defined views of individual cow and heifer data, allowing you to build pages around your priorities, from genetics and reproduction to health and performance, using intuitive drag-and-drop tools and custom alerts. Bovine Bio helps tell the full story of your animals anytime, on any internet-connected device. Herd HQ. See what's happening in your herd. Learn more at drms.org/herdhq/what-is-herdhq.
Good morning, good afternoon, and good evening. Welcome to the Dairy Voice podcast by Dairy Business News. I'm your host, Connie Kuber, with Sealpro Silage Barrier Films by Connor Agriscience. Thanks for joining us today. Please like, subscribe, and share this podcast with your friends. So it's time for John Ellsworth's quarterly report, where we take a look at where we've been and some possible scenarios as to where we're going financially in the dairy industry. And this information is not just for dairy farmers, it's for everyone who works in dairy, because what happens on that farm is a good indicator of the industry's health and affects everyone that works in it. For those of you who haven't heard of him before, John Ellsworth is an independent consultant. He and his wife, Judy, are the owners of Success Strategies, a well-known firm with many years of experience. So we're very excited always to have John visit us on the Dairy Voice podcast and listen up, because he's always really got great insight and information and advice. So welcome to Dairy Voice, John.
Glad to be here, Connie. Thank you for that introduction. My company, Success Strategies, that I started 28 years ago, we focus strictly on strategy and financial related topics, issues rather, that dairymen and other clients, we have some non-dairy clients too that are in our clientele, and we just pretty much help them with strategy, developing plans to expand their business, grow their business, improve their efficiencies, and we monitor a lot of information on the financial side monthly, and our clients in the dairy industry have just been a joy to work with overall. And they've had their share of challenges in the last 28 years. They say history doesn't repeat itself, but it sure seems like it sometimes in the dairy industry. The downside is it repeats itself, particularly if there's some negative vibes that happen in terms of financial results. But the good news is we've had a lot of experience getting through those in past years. So, the very positive side of that is there isn't much we haven't seen in the last 28 years, and the strategies we've developed in that time period have repeatedly worked pretty well. That allows us to act a little bit faster sometimes than someone who's looking at it for the first time. I think the banks have more confidence in the results because they've seen that the strategies we put together have worked. Sure. And been very complimentary about a lot of them. So that's a very positive. We're in a very interesting year. It's had its ups and downs, not just for dairy, but for the whole industry, of course, and all of agriculture, actually.
Clean, high-quality forage doesn't happen by accident. It's built from the field up, with research-proven Magniva forage inoculants from Lallemand Animal Nutrition. You can unlock clean, quality forage for your herd. Every crop, every ton, every year. Magniva Forage. Inoculants help drive efficient fermentation, reduce dry matter losses, and optimize feed value and intakes, so more of what you harvest turns into performance in the bunk, improved fermentation, improved stability, better use of your forage investment. Gain every advantage from field to feed with Magniva Forage Inoculants. Discover how Magniva can elevate your silage quality by visiting magniva.com. That's MAGNIVA.com.
What is your overall outlook here in the States?
This is one of those times when a good friend of mine, we put together this model for, I think it was for Wells Fargo Bank, and we got all done, and it took us like 5-6 days to put this model together. And I said, Gerald, what do you think? And he said, there's only one thing I know with certainty. I said, what's that? And he said, this isn't exactly how it's going to turn out.
Yeah.
and frankly, that's a little bit how these economic forecasts are, because we've had, January, February, March were pretty rough months for pricing. Then we got a little bit of relief. We've continued to get a little bit of relief, but it's not been phenomenal. Yet yesterday in the daily dairy report that I get every day, the class 4, particularly, the butter supply wasn't as big as maybe they had anticipated as an industry. And so I think both powder and butter jumped dramatically, and the class 4 prices went through the roof. That's a good thing for dairy producers, of course. And, I think on the class 3 front, we're still seeing a little price pressure, but you know what? We're heading into holidays as we get into the second half of the year. The summer growing season, first of all, then we get Labor Day, Thanksgiving, Christmas. And so there's some great holidays coming together. So hopefully we'll see upward price movement there too. But I think a lot of our producers are getting pretty keen to how to adapt to this, these changes in prices. And so they can tend to plan for the worst, but when the better happens, then it's wonderful. And the margins overall have still been pretty solid because of high cull cow prices and calf prices that are incredible by historical standards.
Right.
I mean, I don't see that changing for a couple of years yet, and who knows? Some point it will. But just like we talk about inflation, well, it's just transitory. Well, I don't know about you, but it seems to me that every time we go through a bout of inflation, things may go up at a slower pace as they get it under control, but they rarely ever go in the opposite direction. So they still tend to increase somewhat. And so hopefully we'll see it on the milk pricing front as well.
And what about fuel prices? You'd mentioned fuel prices too before we started talking.
As all our listeners probably know, with the Iran crisis, the battle going on there, is the Strait of Hormuz open? Yes, no, who knows? I don't know. An hour ago, maybe it was, now it isn't. It's been back and forth, and we have seen fuel prices back off from the peak where they were in most markets. I mean, I was in California 10 days ago, and frankly, that's one of the most expensive places I traveled in terms of fuel pricing. You live there, so you know firsthand. It's really kind of it's a strange concept, but I think we talked about this last quarter too, that states that have tended to shut down refineries, and California is a prime example of that. They have very limited refinery capacity, so they import a lot of their fuel products. And when you couldn't get fuel out of the Strait of Hormuz in the Middle East over to places like South Korea, who would refine it, ship it to California. And I'm not picking on California, it's just the best example I could think of.
Oh, yeah, it's a great example.
The reality is, and there are other states, and I assume Washington, Oregon may be in the same boat.
Probably.
So as a result, it's just simply a supply and demand thing. There was less supply that it couldn't get to Korea, so it couldn't come to the West Coast. Now, the challenge with that is you would think, well, now that'll all fix itself. Well, it will, but what happens is, as I understand it, it's 2 weeks, 3 weeks supply was already on the ocean when the Iran crisis started, the Iran conflict started. So what happens is you get this delayed effect in prices just because of the mental model we have. Well, supply and demand, it's a war, there's less supply, so the price, immediately we saw them go up. The problem is they have come down a little bit since then, but the reality is there's a void of, say, 2 months supply that wasn't out on the ocean because it couldn't get there. And so as a result of that, I think the federal government's doing the best they can to try to offset that with, I think they've released some fuel, limited amounts of fuel from the Strategic Petroleum Reserve to offset that a little bit. And I mean, I live near Kansas City, Missouri, and I see the prices have been all over the board. In California, you will laugh at this, but our price got $4 a gallon for just regular unleaded gas.
Yeah, oh my gosh.
Crimea River, right?
Yeah, really, no kidding.
But then most recently, it got down to $3.33. That's an 80-cent swing.
Wow.
83-cent swing. But now, yesterday, I was driving I can't remember where I was going to or from, but coming back, I noticed that it was $3.49. So in one day, it went up 16 cents. And I think that's because of the reflection of what's going on in the Middle East. And I'm not a policy expert, so I won't even pretend to be. But on the fuel prices, I would expect while they may have come down, they'll still be high by historical standards. And I hope not, for our listeners' sake.
Get your Sealpro silage barrier film today. Protect the seed, fertilizer, labor, and expensive inputs that you've invested in. Choose best-in-class Sealpro now in 3 different versions: traditional 2-roll application, our new co-rolled application, and super simple and wildly successful 1-layer film, Sealpro 1. It's easy to buy, easy to use. Contractor covering? We'll work with them. Learn more at sealprosilage.com. That's SEALPRO silage.com. Family owned and operated for over 25 years. 559-779-5961. That's 559-779-5961. Well, in California, we're dealing with our own state government that slaps gasoline taxes on us. On Wednesday, gas prices are going to go up a certain amount. That's tomorrow, just because of a new tax that has been imposed. So that's part of it too. And I'm sure there's other states that are in that. But of course, living here, I see that. So.
Yeah, and my response to that is, jokingly, I say, yes, but this time they're going to fix the roads.
All right. Yeah. Uh-huh.
I don't want to get in the middle of a political discussion.
No, we probably shouldn't go there.
But there's factors. But you're right. There's a tremendous amount of taxes in California. My observation between where I live and where a lot of my clients are, the retail price is about $1.70, $1.80 difference. Part of it is probably the lack of refineries, but I think a lot of it is the additional taxes. And in all fairness, they have fixed a lot of the roads, so I jokingly say that. I don't want some political pundit from Sacramento calling me and attacking me over that.
Right. With that said, we talked a little bit before we started here about banks too. Where are the interest rates heading?
I thought that with the change of the chairman of the Federal Reserve Board to Kevin Warsh just a month ago or so, I thought that we would see an earlier decrease in rates. But I think there's 2 camps. One camp is saying, yeah, but the inflation is so much higher which is being driven by fuel prices. And it's not just you and I filling up at the pump. It's practically everything we touch.
Absolutely.
I'm picking up a water bottle here, and it's got fuel-related products in it too. So everything is going up to some extent. That just shows how much fuel impacts our lives. But because of that, the big question is that transitory inflation. So if we get the Iran situation settled, and I think they're getting closer, does that, when the pipeline gets filled again, does that bring everything back down? Or is it so all-encompassing in our economy that prices stay high on fuel and other related things? Because everything you and I consume and all our listeners consume has to be transported, unless it's something you grow on your farm. It's got to be transported in. And that's been a big impact it's been hit very heavily from just the cost of transportation. That part's pretty exciting. I was pretty excited last 10 days ago when I got my rental car in California, and it was a hybrid. So I think I averaged 46 miles per gallon. I was so jazzed. It got me down to about 10 cents a mile. And so I was pretty happy about that.
Yeah.
As far as interest rates, I still anticipate, and I read something in Kiplinger's the other night about their economists seems to think we'll get 2 rate decreases before year end. I think that's a little aggressive. I mean, I'm in favor of it, especially for the sake of my clients. I'm very in favor of it. But, they'd originally talked about at the July meeting that there would be a decrease of a quarter. And that could happen. But I think until the cloud clears the Iran situation and its impact on fuel prices, I think that could get deferred a little bit. Now, I have also heard on the flip side that there's talk of raising rates to slow things down. I think that is the stupidest idea I've ever heard. I don't know who came up with that. That's about the last thing, at least for my clients, the last thing they need is to get hit with a rate increase to slow things down. The only thing that guarantees, in my opinion, is that we would then head into a recession, which is just foolish because, yes, we have inflation, but it's being driven by fuel more than anything, and that's being driven by the Iran situation. Mm-hmm. So hopefully we won't see an increase in rates at all, although there has been some chatter about that, and I think it's based on historical information and not looking forward. Because I think one of the things with all this talk about AI, for example, and that's hitting the dairy industry too. Mm-hmm. Just getting into the Zoom interview, AI was trying to run my life, and I kind of kept going, no, thank you, no, thank you.
Yeah.
But the productivity gains, and I think this is something that the new Fed chairman, Kevin Warsh, has hit on. He has suggested that the financial models that the Fed has used historically, I'm not saying they weren't the best they had at the time, but he's saying they're a bit outdated because what happens is just because you lower rates doesn't mean that we're going to have inflation. It's not going to create inflation. That's the old historical model. He's saying the productivity gains that we have from speeding up the economy, but we get so much broader positives from AI, for example, is one thing, and there are other factors too. Mm-hmm. The improvements we're making, the productivity gains are so much better than they used to be that will offset the inflation and keep prices at a normal level. Mm-hmm. And I'm about at the end of my economic tool shed on that, so we'll see kind of where that goes. But I appreciate his insight, and I think that is clearly different than what we've seen with Jerome Powell, who I think he tended to keep rates higher to slow things down and offset inflation. But sometimes I think it was also kind of politically motivated. To me, that's sad because that's not his job to be
right.
Do things based on politics. It's based on he can love or hate whatever president we have, but that shouldn't impact his performance. His performance should be, let's focus what the variables are that are at hand. But and maybe I'm wrong, but it certainly appeared that it was politically motivated, that he didn't want to improve the economy and have someone get credit for it in the White House.
Yeah.
So,
yeah.
Anyway.
With that said, what are we looking for milk prices? You alluded to the pricing that's come out in the last few days. What do you think about, the short term and the long term of 2026?
The short term looks very positive. Now, what's interesting is I have felt that the downturn in milk prices, as far as supply and demand, was a bit overstated. Like there wasn't as big a supply as a good friend of mine calls the geniuses all came up with in the marketplace. I don't know if he was referring to me and others or what, but anyway, the thing is that I think we're learning that the supply wasn't as big as we'd anticipated. And we talked about earlier about butter, that I think the May 31st supply on hand inventory was 8% below a year ago in the end of May of 25. Now you wouldn't think that based upon the price butter going from whatever it was, $2.75 a pound down to, I don't know how low it got, $1.40. And yesterday I think it went up to $1.70 per pound. But that's still a third lower, at least 1/3 lower than a year ago.
Right.
Well, if you want to talk supply and demand, you got to do it in both directions. You can't say, well, we're driving the price down because the supply is big. Well, if the supply isn't there, excuse me, but it doesn't take a PhD to figure out that the prices ought to be going the other direction now.
Right.
Otherwise, you start to doubt whoever's making these forecasts, whether it's USDA or whoever. And it's a tough job anyway, but you know what? Your job, my job are tough too in some respects, but we don't get it. We don't get a pass for not getting them done. So I think what we'll see is it appears that, particularly on class 4, that the prices have trended upwards in the last few days. And I have this feeling, and my suspicion is that we're getting a dose of reality. The exports have been really good in all dairy products, and that has really carried the day. Now, I understand some countries are up in production also, not just the U.S., but when it comes down to it, I still think we're the number one source for product in the world.
Sure.
Not saying other countries don't make good products, but in terms of efficiency, economy, and pricing, I think we still lead the way, and I think that's being reflected in our export. And I recall that like 10 years ago, we just said, man, if we could just get the exports going, we could take care of the surplus. Well, I think we have. I mean, I didn't have anything to do with it, but kudos to those that did. I think that's a wonderful thing that they've done. And why not diversify your markets? Just as you may serve, the dairy industry, the beef industry, and with the products you sell, and I do too, with not just dairy, but almonds, grape growers, vineyards and pistachios. I'm trying to think what else we do. And then we have some people that are just commercial property space too. So that's been a different area for us to work in. But by serving those different areas, you broaden your experience quite a bit.
Right.
I've said this all year long, that early 26 was going to be pretty brutal. But it looked to me, and it was, I admit it was, I saw the monthly cash flows that I was putting together for clients. Most of them were pretty bleak, but you know what? They've turned around dramatically as we get into April, May, June, and I anticipate we're going to finish out with a pretty solid year. And it's not just based on milk prices, but for dairymen, the cull cow price has remained high.
Right.
When you hear of cull cows selling for upwards of $3,000, that's just incredible.
Well, it's going to take a while for that beef herd to grow. That
Sure.
they're, so that's going to probably how many generations that are going to have to be in order to catch up of that beef herd.
Yeah.
So.
Well, and I think also this, and I wouldn't wish this on anyone, but the screwworm concern.
Right.
Down near the Texas border, if that materializes, that could be tough. The other thing that I've been hearing most recently is the avian flu again in some herds. I may be wrong about this, but I thought I'd heard in Idaho that there had been some infections. That could impact the supply and demand as well.
Yeah.
So really, in answer to your original question, I think the rest of the year, though, I would anticipate that I think feed prices are reasonable. The corn, I'm in the Midwest and I don't see a lot of corn unless I go further north, but it's looking pretty, corn and soybean crops here in the Midwest that I've seen look pretty fun. We've had a lot of rain, and now we're getting this particular week, in my opinion, it's almost unbearable, but 90-degree weather with 70% humidity. And, you can say whatever you want, but corn will take off. Crops will take off.
Yeah. Yeah, it's one of those weeks where you can hear it grow, right?
Yeah. Yeah. And I have some hay ground that yesterday they came and cut. If they cut it on Monday afternoon and they think by Wednesday night they're going to be baling it, Wednesday late in the day they'll be baling it, that tells me it's pretty darn hot if it's dry in that.
Yeah.
Especially with the little bit of humidity we've seen. I think the rest of the year is going to be pretty solid. You only know that if you measure it and get a good grasp of what's going on in your operation, not compared to a 10,000 cow herd, but compared to where you've been historically. And I think that's pretty valuable information to have.
What about the banks? How are they doing, and how supportive are the banks being right now?
I think overall they've been very supportive. I see them becoming more like the stock market in that if you have decent earnings and you have positive results and a positive management plan, as some stocks that we own and that we all own do, if the earnings are there and the profitability is there, I think, and a plan is in place, I think they've been very supportive. Where I've seen them shy away from deals is we've not been able to do any magic yet, and I'm hoping over time we can do that, and I think we can, but they haven't necessarily been the most profitable. Frankly, that's where most of our referrals come from, is from people who need help.
Yeah.
And I'm okay with it. I love helping people with that. The most positive thing for us is if you get them turned around, which we've always been able to do, they stay forever. And I think that's a great thing. The repeat business is a good thing. The banks have been very supportive, even on deals that are, I don't want to say marginal because that's kind of berating them, and I don't mean it that way. Maybe they've not had this historical earnings that you'd like to see, that the bank would like to see. I think it's a balancing act but I find that banks are open, at least the ones I've dealt with, are open to, okay, I realize they haven't been profitable. Let's take a look at why that is. Didn't have the right cow numbers, didn't have the right facility, whatever. It could be any number of things. But we got those things under control. I'm anticipating over the next 2 years that we're going to do X, Y, and Z. And they are at least amenable to listen. Mm-hmm. Now, they may not say, well, okay, we'll make the $1 million freestyle loan right now. But what they may say is, we agree with you. Let's see some improvement, and then we'll go.
That's to be expected, right? I mean,
I think so. Yeah.
It's reasonable. Yeah.
Yeah, that is not unreasonable at all. I think some banks, not all of them, but probably half or 2/3 of them have increased the value of their cattle. In the appraisals, they're not going to go crazy. They're not going to say, oh, they're worth $3,500 per cow. They're not going to do that. Because they've never been willing to go to that extreme. Mm-hmm. Because anytime they did, they almost always got burned.
Sure.
Well, the cattle prices dropped, and then they had a $1,500 loan per cow against a cow that was worth $1,400. So that's never a good thing. And I think there's something to be said for the producer, the borrower, having a stake in the game. Mm-hmm. I remember a banker telling me this story. He said he had a customer rather, who was, their loan to value on the herd was 65%. So in other words, they had 35% equity. That's not unusual. But you don't want to go much higher than that. And the customer came and he said, I want you to put more money into this herd loan. He said, we already have more money in it than you do. So at 65% loan to value, I thought it was an interesting perspective.
Yeah.
And, so that was a polite way of saying, no, we're not going to leverage you up, which you don't want to do because leverage is fine until it's not. Yeah. And it can be a very painful process working through that. But overall, in answer to your original question, I think the banks have been fairly supportive. But again, they are looking for people who are profitable. And it doesn't mean you need to make $1 million every year. I have some clients that make more than that every year, but not every operation can do that. Mm-hmm. And so as far as different size operations, different managerial systems, older facilities can be a constraint sometimes. They want to see a pattern of profitability. And I think if you've got a game plan, I think, frankly, that they enjoy that. I think most loan officers say, hey, I like the looks of this. Let's pursue this. I found them to be fairly supportive.
Sure. Well,
but they're also looking for things like, most of my clients are doing DRP, the Dairy Revenue Protection. Mm-hmm. They want some assurance rather, of price level support. Mm-hmm. I don't know if we'll ever go back to $10 milk like we did 20 years ago a couple times. I don't know, $10 to $12 milk, but the banks are not willing to run that risk. So I think, I just call it insurance, is a good thing. I think it's you don't have to insure 100% of your milk, but you do what you're most comfortable, what mm-hmm. level you're most comfortable.
Well, it sounds like they want customers who are using all the right tools and or at least using some of them and have a plan. And that being said, where should we put our primary focus now for the next 12 months?
I don't think it changes for me and for my clients. I don't think it changes year to year. I think we measure the inflows and outflows of money every month, and not taking anything away from the accountants. They do a phenomenal job of putting accrual financial statements together. We can't wait till June to get a 12/31 financial statement. I mean, we can wait for the financial statement if that's how long it takes to do those. And they have a lot going on with tax changes and everything else,
Right.
especially the first third of the year. But the reality is, I think it's a responsibility of the producer, the dairyman, and people like myself who work with them to know long before we get the CPA's financial statement. Will it be identical? Ours be identical? No, because they're doing, I just call it truly accrual financial statement. We try to get as close to that as we can so we have reality. And so if somebody prepays $1 million of feed at year end, we're going to back that out and blend it in over the next 6 months or whatever, because that's what the CPAs do, and that's the correct way to account for that. It was a tax-related event to prepay $1 million of feed, not a managerial event. I think you can have a pretty darn good handle revenue and expense long before the CPA gets it done. And again, I'm not taking anything away from them. They do fantastic work, but it's not rocket science. We can get pretty darn close. I've gotten as close as like $30 million business, got within 3 cents per hundredweight. I'm still patting myself on the back for that one. Jokingly, I just, of course, and I said, and the accountant, and I really like the guy. He's first class. And I said, I don't know, one of us was off by 3 cents. I'm just presuming it was me, because he's really good at what he does. The blocking and tackling doesn't change year to year. Having decent financial statements is good. Number one ahead of that, as I said, is I think we need to measure our cash inflows and outflows every month and account for those, the prepay items, things like that. I think managing the growth of the herd is important. I have some other professionals that I work with clients who I just think are phenomenal, and they've created a huge revenue source. The beef cross calves have been huge. And it used to be we'd have between cull cows and calves, we might be $3-4 per hundredweight total between the two. I mean, I have some clients that are as high as like $8 to $9 a hundredweight right now. It's just incredible.
Yeah.
But what a godsend for a downturn like we saw the first quarter of 2026.
Right.
So, but we wouldn't, other than the fact that we would have more money in checking, we wouldn't have known that if we didn't measure it. And I think that measuring is important. I think the DRP, the Dairy Revenue Protection, and related programs are really good. The CPA financial statements are great. And I think, farming has become a big thing too, because, you can farm, if you're a good farmer, you can farm, and I am not a good farmer, but I see other good farmers in my clientele. But I think that can make a big difference on profitability. Keeping the feed costs lower, it's just amazing. And I think we're in a time period right now where commodities are not wildly out of control. We've faced that before. We're getting hit more, as we talked about earlier, with the impact of higher fuel prices. But that too will iron out over time, and hopefully we don't get burned too badly on that this year.
Right.
And that is it's not as big as overall. It impacts the feed cost, but it's only a portion of that. So, and I think also this is a great time to be thinking about strategies. I mean, I think about it all the time because that's what I get paid to do, and I get excited about doing that. But I love nothing more than seeing somebody succeed at a higher level. But I think that takes a lot of strategizing. That's why I do that with clients every month. I think it's important that we start thinking about, okay, you want to milk 2,400 cows? Well, you're only at 2,000 right now. How do we get there? And then using other professionals as well as myself, we put a plan together, and that's how we get there. It's not that plans won't occasionally fail, but failing the plan is not a good alternative at all. There's a lot of good things happening in the industry. There's expanded plant capacity, which frankly I thought would hurt the industry a little bit because of, filling up all these cheese plants. And cheese price has not been phenomenal, as we talked about, but hopefully we'll see some improvement with the efficiencies of these new plants too.
Mm-hmm.
And there again, that could go to somewhat to AI also. I'm sure there's, and I am not an equipment expert by any means, but I'm sure computer controlled AI related inputs are helping tremendously to boost their efficiencies. So, and I think that things like AI are going to have a very positive impact overall. Will there be some downside? Yes. Will the stock market, will we see another 2000 due to AI drama? I don't know. I could do these interviews all the time if I knew that, but I don't. So I'm not going to pretend to. But I think overall, watch the economy. If we see interest rates coming down, take a look at some things like, should you fix the real estate rate, the interest rate rather, on your long-term real estate loan?
Right.
It wouldn't be too jumpy to do that, but because there's a lot of uncertainty whether they're going to go up a little bit, down a little bit.
Mm-hmm.
But if we get into a heyday period, and I had clients that we were able to lock their long-term interest rates at 3.5%, 4%. Gosh, that is tremendously below the historical average, especially for long-term loans.
Yeah, probably really made a difference to them.
Oh, yeah, and it has made a tremendous difference.
Yeah.
Basically, if we were paying down, the fastest rate of paying down debt was herd and feed, and we got that cleaned up, and we could live with the 4% or 3.7% interest rates on the real estate. Mm-hmm. We could live with that for 20 years. That was no problem at all.
Right.
That was good. But I think all of those, including things like DRP, are what I call opportunities. Sometimes they come out of challenges that we face. My business coach, Dan Sullivan, talks about, he had this one exercise we went through. He said, I want you to think about things you used to do that work so well, and he entitled it, "This worked so well we quit doing it," which sounds silly, but the reality is it really did. Somebody left the company, and we didn't have somebody to fill in that gap or what, but it's a good exercise for people to go through.
Sounds like it's a steady as she goes type of mindset, and with your eyes open to see what other strategies and opportunities you can take advantage of that are long-term good for your business. So we've talked before, I just wanted to mention a little briefly, we've talked before about the mental health part of all of this. I am thinking that you're probably seeing people fairly calm about things and and things just kind of working along. Any comments about that at all?
Well, you know what? I was just, before we got on this call, I was going through a blog. Will come out toward the end of July, a blog and video. Tomorrow we're going to record videos associated with it. But I think it's a time, of relative calm right now. I don't see any super panics. Maybe fuel is the only thing we're panicking about it.
Right. But in the overall scheme of things.
Yeah, it's, I think the economy overall is good. I think we'll see pretty good gross domestic product. The rest of 26, I think it has already improved in the second quarter of this calendar year, and I think we're going to see further improvements. I can't help but think that the implications, not just in the dairy industry, but the whole economy, of lower interest rates, lower taxes, fuel prices, they come back down. They were relatively low. I can't help but think that all those things added together wouldn't make for a very positive outcome for the year.
Right.
But as far as the mental health aspect, I don't know if you're referring to our producers or mine, but
all of us.
All of us. Yeah, it can be stressful when milk prices are dropping, or especially if they plummet in a matter of a week or something like that. we all kind of go, oh my gosh, what's going on here? But my father-in-law recently passed away, and on the last day of his life, my wife, Judy, and I were there by his bedside, and it was a very touching moment, but he was in a lot of pain, and what I'm just amazed that he was so lucid, he was so eloquent and he was a farmer. He had been a dairyman a long time ago and had raised beef cattle and farmed a lot of wheat and soybeans, some alfalfa. And he looked at us and he said, "Kids," which was a real compliment when you're, when you're the age that we are. But as I said, he was 3 weeks short of 91.
Oh my.
But he said, "Kids, I want to share with you, remember the 5 F's." I kind of went, what? What are the 5 F's? Well, the 5 F's were faith, family, friends, farming, and as a Kansas City Chiefs diehard fan, he said football was number 5. But I thought, how amazing. I thought it was worth publishing that at the end. So that'll be out at the end of July. So we'll give a sneak preview on that. No matter what is going on, the faith, family, friends, and his farming and football, obviously our listeners are in farming, are all really good things.
Right.
And I thought about even the football. I go, how do I fit that in? And I thought, you know what? It's teamwork.
Yeah.
It's camaraderie. It's seeking a common goal. But that leads you back to the faith, family, and friends, because those people, when you're having a down time, the best thing you do is communicate with those people.
Right.
Let them know what's going on, what you're thinking about. And we've all had moments in business, including myself, where, it's been a struggle, but it's nice to have a spouse that you can visit with or family members you can chat with. I remember a real low period when our son was just 2 years. He was 2 years old at that. He had just had his third birthday probably. And he said, no, it was his second birthday. And he said, "You know what, Dad, things may be slow now, but at least you get to spend more time with me." Yeah, and I just thought about that. But that's a good example of family and friends coming to your rescue.
Right.
So that's an important thing to keep focus on. There's, and I don't remember who said this, but maybe it was part of the Lee Greenwood song, "God Bless the USA." If he lost everything, but he still had family, and his faith, he would be okay.
Yeah.
And I think even producers, you don't have to have a PhD in dairy management or finance for this to be the case. You have a tremendous amount of positive experiences. There are people. So even if you got out of the dairy business, I've had a few clients sell out in the last year for various reasons. But I think there's still a lot that they can contribute to the industry, but perhaps in a different role.
Sure.
And I'm not talking about being a salesman necessarily, but there's any number of things they could do to work with younger producers, to guide other people, to get into the banking industry. That they would bring a very positive perspective to the banking. Most of the bankers I deal with haven't had dairy operational experience. And that's not a put down, it's just an observation. So it makes it a little more difficult for them to understand what we may be trying to convince them to do. Now, I've had the benefit of being a herdsman out of college, and I've had the benefit of working with the Holstein Association. So, and then in banking, and now in this consulting role. So I've kind of gotten a glimpse of every side of all 4 sides. It's been very beneficial in that respect to have that balanced look, because you'll make better progress when you understand where the other side's coming from.
Sure, absolutely.
And I think there's something very positive to be said for that. I'm looking for a great rest of the year. I'm excited.
Good.
Great. Which we will start tomorrow, the second half of the year. So
thank you, John, for sharing all this today. We really appreciate you coming on here and always giving us really good advice and really good insight on what's going on. Where can our listeners find out more information about Success Strategies?
Our website is www.successstrategies.com. insighful-success-strategies.com, or they can email me at john@success-strategies.com also if there's something I can help them with. And you know what? We're always happy to visit with people. I have a gentleman in Virginia who he'll probably listen to this and maybe he'll call me. And once a year, he'll call me and he said, you know what? I dialed you by mistake, but I'm glad I called it. And I always have such a nice chat with him. But the interesting thing is sometimes it's just somebody listening to your challenge, your problem, your decision that you're trying to make and saying, well, have you thought about this? And you know what? I don't charge for phone calls. I love talking with people.
Well, I'm Connie Kuber with Sealpro Silage Barrier Film by Connor AgriScience. And now is the time to put harvest plans into action by making sure that you have all the supplies you need, which includes quality oxygen barrier film. Take a look at our website, sealprosilage.com, for our product offerings. And we also have lots of harvest resource information there. Give us a call. So you've been listening to Dairy Voice by Dairy Business News today. Please subscribe, like, and share this podcast. I'll remind you to stay safe out there. Remember to come home safe to your family every day and your employees as well. So thank you for listening to everyone. We'll talk again real soon.